Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. Today, we have another edition of Deal Debrief, where we get the download on recent transactions from the people who put them together. On this episode, we're joined by Frank Yu and Erson Olivan, managing partners in our private equity group and co-heads of Brookfield's Special Investments Strategy, to talk about Spring Education Group, a private education platform which we invested in earlier this year. Frank, Erson, welcome to the podcast. Erson, why don't you introduce yourself and tell us what you do at Brookfield?
Sure. Erson Olivan. I'm a managing partner in our private equity business. I've been with Brookfield for over 15 years now, all within our private equity group. Had the opportunity to work on a number of different deals, number of different initiatives across our various strategies within our group, ranging from buyouts to capital solutions. And then today I co-head our non-control flexible capital strategy together with Frank.
Has it been 15 years in PE?
Yeah.
Wow.
Yeah.
All private equity.
I joined in 2010. I joined in Vancouver, actually.
Nice. That's great. And how about you, Frank?
Thanks for having me. So Frank Yu, I'm one of the managing partners in private equity as well. And as Erson mentioned, co-head our capital solutions business underneath private equity. A little bit of a newer joiner to the Brookfield family. I've been here since 2019, but have been working in called the flexible capital space for virtually my entire career. So I've been doing this for quite some time.
Great to have you. We're here to talk about spring education, which sometimes people don't always think about education as the kind of sector that financial services might intersect with. So it would be great, especially for those who don't really think of private education as its own, let's say, quote unquote, asset class. How do we think about that space? Why is it maybe an interesting or an attractive space for investment?
Look, I would say you're absolutely right. This is an asset class that has been institutionalizing for private capital for quite some time. We've been spending quite a lot of time just in this space, really understanding a little bit better. But I would say that there's really three key things when you take a step back and think about what really attracted us into private education. First, there's been a very long-term secular shift towards private education. If you think about, we'll pick on the US as one of the geographies, just a dearth of public funding. You're seeing that today at the state and local levels. So as a result, there's a need for alternatives for families, for parents, and just finding the right academic outcomes. So folks are looking for those alternatives. And that's been a nice positive tailwind, which we expect will continue on for quite some time. The second piece of it is, if you look at the sector, going back 10, 15, 20 years, these were mostly mom and pops, single shingle type of schools, and very obviously education focused, but it wasn't necessarily ripe for private capital at that time. Over the last 10 years, that has institutionalized quite a lot. So while it's still relatively fragmented, what we're seeing is there's a few platforms now that have actually consolidated and actually professionalized those businesses into a private for-profit business. And the final piece, which we can dive a little bit more into, is if you look at the actual business model, it's highly attractive. We think about it as effectively critical social infrastructure. These are essential services where you effectively get long-term contracts with families. So once a parent puts their kid into a school, the last thing they want to do is take that kid out, unless you physically are moving. And the business models themselves, if you think about from a private capital perspective, is attractive, just given really high ROICs. So return on invested capital for every single dollar you're putting to work in the ground. The company can actually make a really good profit coming out of that.
Sounds like a lot of our other investments, a lot of downside protection, right?
Lots of similarities,
behavior.
Exactly.
So tell us a little bit more about Spring Education. What kind of school and education company is it?
Yeah, the business is actually a consolidation of three different platforms that was actually put together about 6 or 7 years ago. Today, it's the largest private education platform here in the US. And what that means is the entire company today has over 200 schools operating in roughly about 20 states across the US, serves over 40,000 students annually. The offering itself is the full spectrum from pre-K all the way through 12th grade. Now, they operate a number of different brands across those states that I mentioned, but the ones that our listeners may be familiar with, there's two brands. One is a national level brand, and the other one is a regional brand. The national one is Basis Independent. They're on the East Coast and the West Coast, typically in major cities. And the regional one is Stratford, which is one of the dominant brands in California. And what the company really offers is really high academic outcomes, but at a value-based price, especially compared to what we think about as legacy private schools. So to give you an example, I'll just pick on one of the brands, which is Basis. This is a brand that has been operating for quite some time. The average SAT score for its students is over 1480. Average AP scores that high schoolers are taking is over 4.5. So creating really good academic outcomes, which results in the students entering into top universities across the country. So it's very exciting. It is specifically catered towards that demographic and that type of experience that parents and families want from their students. But it's at a very affordable price point. And the reason for that is this is the most scaled player, and therefore its cost structure, its ability to really get great outcomes just has advantages over those individualized mom and pops that are out in the market.
Nice. Let's break down what happened with that ultimate transaction. Can you just tell us a bit more about it, about how we find these investments that ultimately become a very good fit for Brookfield?
So I'd say similar to Spring and our other opportunities that we look at, I think what we're really looking for are things that really fit well with our strategy and things that fit well with what we do more broadly across private equities. So I'd say Spring's a great example where, one, it's a high quality business, provides essential products and services, as Frank mentioned. It's pretty much social infrastructure. Spring itself is a market leader, generates very predictable infrastructure-like cash flows. So we think it's a great business. I would say second is it really ties to our focus of being a strategic partner, where we can leverage both our operating capabilities across our private equity group, as well as the link that we have to the broader Brookfield ecosystem. So with respect to Spring, great example of that is a large part of the business is managing its real estate footprint. That's an area that we've been able to really lend our expertise. And then I would say third is, as you point out, our focus on downside protection, but at the same time having some upside participation as part of our investment. So again, Spring is a great example of this. We've got really strong downside protection by being more senior in the capital structure. We've got a contractual rate of return. We have strong rights and governance, but at the same time, we have an ability to participate in the upside and the equity value that we are helping create in the business.
Yeah, that's a good point, because I was thinking about, some of the deals we talk about are billions or multi-billions of dollars. What is the investment opportunity size, maybe in education, that might be different than some of the other more, let's say, general infrastructure kind of projects we look at?
I would say in the private education, because of what is a very large TAM, but it's still quite fragmented, that consolidation play has actually driven opportunities that we can put in very much scaled capital. In Spring, we ended up investing on just this deal, $825 million of our own capital. We led the deal and brought alongside our partners, our clients, to sort of co-invest alongside with us. Again, very scaled. And I'd say going back to just the sourcing of it, because I think Erson's absolutely right around sort of how we started at a very high level. What's unique about what we do, and this is both across all of Brookfield, but obviously within our private equity business, is when we find sectors and themes that we really focus on, we go pretty deep. And so I mentioned we've been looking at the private education space for some period of time, and we had gotten actually to know the business about 2 years before we did this deal earlier this year. So it was a long-term relationship that we built with the management team as well as the owners of the business. And it just so happened that the owners were working through a process that was just different than what we ended up doing, different format of capital. And they decided that was not the right answer for them. And because we had this very bilateral conversation in the background, getting to know each other, getting to understand the Brookfield value add and sort of how we invest, we ultimately came to a set of terms where we were providing them very flexible, creative capital that solved a bunch of the things that they were seeking for. And it wasn't neatly packaged in the market in sort of the traditional sense. And so we think about this one as something that's very unique. It's representative of our non-control flexible capital strategy, but these things take time. They take a lot of effort. And what's great about it is most of them just end up being truly customized solutions for the counterparties.
Yeah, you are alluding to something that I want you to help unpack for us a bit more, which is, what does flexible capital solutions really mean? So in this case, Spring maybe wasn't thinking about a very basic, maybe equity-only deal. But what do we mean when we say flexible capital? What does that entail?
Yeah, I think the way we think about flexible capital solutions is, again, providing flexible strategic capital to businesses, owners, sponsors in a non-control structured format where we're blending features between debt and equity. In fact, we can do this in either a primary format where we're providing capital to help grow a business, growth capital for M&A, capital to help recapitalize a balance sheet, or in a secondary format, we're surfacing liquidity for a founder or sponsor. And in fact, in many cases, tying back to the flexible point, we actually do both in the same transaction.
Yeah, and I would just add on to that, Erson. I think those are, the catalysts that always come about. What's also very unique about what we do is we don't have this template form of capital that we utilize in each approach. It really is about listening to the counterparties, to the companies, the management teams, owners, whoever it is that we're working with, figuring out what their needs are. And our strategy allows us to be, when we say flexible, it really is thinking about all the different solutions. So we can sometimes go up and down that capital structure and think about what may make the most sense. Sometimes it's a little bit more debt-like instruments because that's the right solution for the counterparty. Other times it's more equity-like. And in fact, most of the times it's actually this hybrid instrument where you have a little bit of best of the both worlds, and that's not readily available in the market. So these companies aren't just tapping into the broadly syndicated credit market where they're doing a on-the-run equity offering, but they want something a little bit more customized.
And I think what's really unique about our strategy is Frank's point about trying to find a solution for a need. I think it's not only the capital need that we're trying to find a solution for, it's also, is there a strategic need that we can help with? Again, Spring's a great example. Is there an area within the business where we can lend our expertise, lend our operational capability, and we can be a really value-add strategic partner for somebody to help them grow the business, grow the equity value in their business? Which again, for us, it's always that balance between downside protection and upside participation, and participate in the upside that we're helping create in the business.
Yeah, and as you describe it, it's like really acting like an owner in the trenches alongside these organizations and partners that we have.
Absolutely. I would say we're very active investors in that front, even though we're not in control. So what the counterparties get from us isn't just capital, but they get all the resources that our private equity business has to offer.
Yeah, and that's probably a good segue as well to this idea of this really 360 partnership. It's not just the capital and it's not just the operational support. It's really the whole thing together and the flywheel effect of that. So let's bring it back to Spring specifically. What does the next step or the future of that partnership now look like?
Yeah, I think it's a couple aspects. I think one, as I mentioned, large part of the business is its real estate footprint. I think it's helping them manage that, helping them optimize that. And again, that's an area where, just given our platform across Brookfield, we can really lend our expertise, be a strategic partner with them in terms of how they're developing that portfolio. And then I think the second is just the operating capabilities that we have to offer to the business. One thing that we've done in the business is we provided input into things like requisite organization. In fact, our partner has been very welcoming of our input. And a great example of that is, as Frank would say, even as we were working through our diligence, so before we even signed the transaction, that partnership was already beginning to develop. And in fact, the management team had come to us asking for input on certain hires they were making. Even before signing, between signing and close, they actually very much welcomed our involvement just in their process, because just through all this time we spent with them, we were able to show them how we could be a value-add strategic partner.
And I would fast forward to today, because you're absolutely right, that partnership started so early. We actually had the CEO of Spring in our offices this morning, and we were just going through a number of items. What's great about the partnership is, at the end of the meeting, there was one topic that we were focused on, but he said, look, I've got 3 other items on my list. Can I just run them by you really quickly? And the 3 items, just tying back to what Erson mentioned. One is, he wanted to have another session with our real estate colleagues because there's a number of new de novo builds that we as a business are looking at. So you can think about our data science team on the real estate side, our financing capabilities on the real estate side that just can add value to this company right off the bat. And then the second piece of it is, from our operating side, we've got a number of board seats in the company. And so one of our operating partners who worked on the deal alongside with all of us from day one has been working with the CEO, the CFO, and thinking about what is the right org design as we continue to grow this business. And there's multiple divisions and segments and geographies, obviously, across sort of the portfolio. So we're doing that in a very institutionalized and growth partnership way. I think that's what got them super excited. And we're only a few months into this relationship with them, but I'd say that they're probably already utilizing as much as they possibly can get and probably drink out of a fire hose.
It sounds like that, right? I mean, a lot of value add in ways that sometimes you want to have a school feel like a school, but sometimes there's a lot of thinking around just structure and process and framework that can really make that even better.
I think one really unique part about our strategy, and we've spoken about bespoke, customized a few times. I think what that does actually is it allows us to create the partnership early, because in many ways, as we're working through our process with the company, again, we're trying to understand what their needs are from both a capital and a strategic perspective. It becomes very much a partnership, solutions-oriented approach, even as we're working through the negotiations on a transaction. So actually the partnership starts well before closing, well before signing, and it starts when we're trying to develop this highly bespoke, highly customized, tailored solution that meets the needs that our counterparty is looking for.
And that actually makes me think of, you had mentioned to me that there was another education company that we have also partnered with before. I'm just curious, are you starting to see trends and similarities across different partners in this general space? Are there unique aspects based on geography or based on culture? How is that starting to take shape?
Yeah, I think the overall sector is very similar in a lot of ways. So some of the characteristics that we mentioned around the underlying secular tailwinds, the great business models, high free cash flow conversions, high ROICs, those are generally for the best-in-class players, pretty similar across geographies. You will see some differences in local geographies where the underlying pinnings of it, whether it's on the volume or the price side, the drivers may be a little bit different. But overall, the reason why we like this space is it's highly scalable. The trends are here for a relatively long period of time. And there's areas where we can pick and we can actually add still a lot of value. So we have approached this thesis and this theme really on a global basis. So Spring is the largest player in the US, and we are super excited on partnering with them on that. We do have another investment in the Middle East, also with the largest player there. And then we continue to look at other areas globally where for the right platform, for the right partner, we would love to make another investment at the right time.
I would just say, again, what we like about private education just aligns more broadly with what we like across our entire strategy. It aligns well with what we're doing across our broader private equity business, which is focusing on high quality businesses, market leaders that provide essential products and services, being a scaled and value add strategic partner. And then at least for us, when we're investing, again, having that right balance between downside protection and upside participation that we look for in all of our investments.
I can't think of anything more essential than school at this moment. So that definitely tracks for me. So that then lends me to open up the aperture a little bit and say, so are there general trends that you are seeing as it relates to the kinds of potential partners that need flexible capital solutions? We're talking about education here as one, but just in the time and place that we sit, how else are we seeing market forces or other things at play?
Yeah, I think the way to think about it is our strategy, it's an all-weather strategy. So we are investing across all periods of the cycle. But what's very unique about where we are today is we are going through a bit of volatility. And you're smiling only because I think we all know what that means from obviously the economy, the capital markets, et cetera. What's fascinating is if we look back at our business, I don't know, Erson, if you agree, but over the last probably 6-9 months or so, two prevailing themes have really shaken out. One is what I would call the DPI trade. And what that means is because the capital markets have ebbed and flowed a bit, where sometimes it's open, sometimes it's shut, owners of businesses haven't had a reliable window to actually sell their businesses and create liquidity for themselves. So our type of capital where the flexibility and being in a non-control position actually helps solve for that. We're getting a lot of deal flow where folks are saying, I really need to continue growing the business. I'm not ready for a full sale yet. So I need to bring in a strategic partner, but I need flexible capital because I don't really want to put on more debt, and doing a pure equity issuance may be very dilutive. So huge catalyst one, which is the DPI trade. DPI is basically distributions paid in. And what that means is for every dollar that you've invested, how much capital have you taken out over time? And then the second trade I'd say we're seeing quite often is the refinancing of capital structures. This has been building up in the system for quite some time. Obviously, when we had very low interest rates and everybody was rushing to refinance the capital structures, which was absolutely the right move at that time, what we're seeing now is a lot of maturities are coming due. And what we're also seeing is because of where interest rates have moved over the last several years, they're still relatively high, despite obviously some of the forward forecasts that people are projecting. That high interest rate has actually created a potential capital structure imbalance. So what we're seeing are basically great businesses, but broken balance sheets, and an opportunity to really get into those businesses to help refinance their capital structure with something a little bit more flexible. And again, create that strategic partnership with those companies to continue that leg of growth over the next 3 to 5 more years.
Yeah, I think Frank said it well. Maybe just another one I think I would add is beyond the two catalysts that Frank mentioned are just opportunities to provide growth capital, which may not always seem like it aligns well with just the volatility that you're seeing in the current market environment. I think what we would say is what we're seeing is for businesses that are fortunate enough to be on the offensive, it can sometimes be a bit more challenging to find traditional forms of capital in what is a more uncertain or volatile environment. So what our capital can do is, again, it can be quite attractive. It's flexible. It's strategic. So for businesses looking to be more on the offensive, whether it's transformational acquisitions, tuck-in acquisitions, or other ways our capital can help accelerate growth in their business, again, we can provide a solution that can allow a business to capitalize on uncertainty in a certain market environment.
We're in a quite interesting and uncertain time compared to where we might have thought we were uncertain 5 years ago in the depth of a pandemic. So the only takeaway I have from that is you never know.
Exactly, yeah.
And that's the kind of flexibility and elasticity that you want in a partner, but also in a real partnership like this.
Exactly.
Where there's a lot on the table.
Totally agree.
So you've been in the trenches with these partners of yours now for quite some time. Like you said, this can start 2 years or more before a transaction. We're finally working deeply together on all of our shared goals. Has there been anything that's really surprised you or gotten you excited about the space in a way you didn't expect now that you know so much about how it works?
Yeah, I would say maybe it's a surprise, but maybe it shouldn't be so surprising. It's always just interesting to see just how welcoming some of our partners are, and specifically in the case of Spring, just how welcoming they are to our partnership and how they've embraced us and welcomed us in as partners. The examples that we talked about, such as getting our input on the management team, getting us involved in the business even before signing, asking us questions around how we can help optimize their real estate portfolio. I think that's a great example. And there's always examples like that in every situation, every opportunity that we look at. But I think that's always something that's interesting to see as these transactions and these partnerships develop.
Yeah, treating feedback as the gift, huh?
Exactly.
Yeah.
I would add maybe more of an interesting tidbit, and this was quite exciting. About a year ago, when we were working pretty actively on the deal, it just so happened that it was during the time of the US Open. And so obviously there were a lot of Americans that were doing really, really well through that tournament. One of the offerings that Spring has is an online education platform. It's called Laurel Springs. It's one of the largest in the US. And what they cater to are effectively very high performing students that aren't physically able to attend school. And so what that translates to is a number of the American tennis players are actually Laurel Springs alum. So the ones that come to mind, Francis Tiafoe, Taylor Fritz, all alums. I think the school is very proud of that and obviously have been able to support them as they've been going through their career journeys, on top of obviously getting a fantastic education.
Yeah, we're hitting it out of the stadium, right?
Exactly, yeah.
Online and on the court. That's
hopefully
amazing.
Keeping it in the court, yeah, exactly.
Very cool. I didn't know that.
Maybe one thing I'll add more broadly that always amazes me is just the opportunity set in this space. And actually, a lot of people may not appreciate this, but we ourselves at Brookfield and within our private equity business have been doing this type of investing for 25, 30 years, providing flexible capital solutions, being a strategic partner to a partner where we can add value. And what's amazed me, especially more recently, is just the opportunity set that we have in front of us. And again, we focus on the things that we're good at, focus on businesses that provide essential products and services, businesses where we can be a real strategic partner to somebody. And I think for us, what amazes me is that opportunity set only continues to grow.
Well, and it's an interesting meta layer here. Like being an eternal student, even of the education sector, allows you, as you say, to really open up this offering to any kind of business, any kind of challenge, any kind of gap where we could really be a helpful partner.
Exactly.
Well, on to the next. Thank you both.
Thanks for having us.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.